Hello again, everyone. This is Joe Hentges with Beyond the Chart. In this technical analysis of the stock market video, we're going to take a look at the SPY this week on a daily and weekly charts. Take a look at gold, GLD, and the gold miners, GDX. And then one of my key indicators I look at, the Baltic Dry Index. So stay tuned. All right, let's start off here with the SPY on a daily. You can see it was up 75 cents on Friday, a little inside up candle. But when you look at this, I mean, the short-term trend is still to the downside. The 10 exponential, which is the blue line, is still below that 21 simple, still trending down. We've bopped, slightly above it, then back below it, slightly above it. And so right now, and the 55, I was going to say this red is the 55 simple also. Right now, the 21's broken below that 55, just ever so slightly. So what I'm watching, this looks like kind of a pullback consolidation type activity to me. I am looking for this to come down, break this little trend line in here, this little control, almost like a little flag type activity. And what I'm looking for is an A, B, C move for a zigzag type of correction. Okay, and so what would we be looking at if that is to play out? And we'd be coming down, and at a minimum, I'd be looking for C to equal A. C equals A right here at 220, almost 228 and a half. Okay, so that's at a minimum. And then what are we looking at in terms of a previous fourth wave? We're down here slightly below that, down into this range right in here, which would be right where the 161.8% Fibonacci projection gets you. So it's, the A does not have to be, C does not have to be equal to A. That's the first thing I kind of look for. Then I look for a 138.2 extension and a 161.8. So we'll just watch the wave count. What I'm looking for is 5 waves to the downside. Right now we've got 1, 2. I'm expecting the next one to be down. All right, that's the SPY. Take a look at a weekly chart. You can see the bigger picture. We are in the 5th intermediate wave to the upside, the 5th and final intermediate wave. And 5 waves within that wave. 1, 2, we just completed 3 on March 1st with that exhaustion gap. Now we're doing 4, and I expect 1 more move to the upside. So that's how it looks here on the weekly chart. Again, I'm just showing the 10 and the 21 here, and we've had a little bit of an inside up week, up $2.08 for the week. So that's the picture. Looking for a little more pullback before this thing is completed. Let's take a look at gold, GLD. Okay, GLD in the short term looks like the short-term trend and intermediate trends, they're pushing to the upside here, but they're going to need to continue that impulsive type look for this to play out. Right now, they continue to ride above that 10-day moving average, and the next resistance is going to be up here 124.5 to 125. We punch through that, then we're going to get up and probably make a run to test this 131 up here. I'm expecting it to surpass that. What we're really looking for is a WXY, and Y should go well above W, all right? Because we've got a kind of a complex corrective action that's going on, and we're doing a large zigzag type move. Now, the thing to be cautious about is that when you get into corrective moves like this, Y can morph into just about anything. I'm expecting a zigzag, but it could morph into a triangle. It could morph into some other, a combination of all of the above. It could be a lot of different things. So that's why we continue to watch the wave count in here. And so far, it seems to be playing out. That is the picture on gold. How about the gold miners? Now, I'm kind of looking for the same thing with gold miners. This A, B, C 3-wave push. But right now, they've been stalling out a little bit. Okay, this looks almost like more of a 3-wave move, especially since this came back and overlapped the top in here. Okay, so this is making me wonder that maybe wave 2 is not complete yet. Okay, we could be doing a little bit of an A, B, C, and wave 2 not complete yet, because this just hasn't followed through and punched above here. Now, if it turns and goes, then this could be looking like what I'd be doing is counting this as minor wave 3, and that this would be a 1, 2, 1, 2, that we're working a 5-wave sequence within that third. Okay, so right now the real key is Monday, Tuesday, we need to see this back above that 10, above that blue line, and push into the upside. We continue this move to the downside, and those moving averages are going to cross. And when they cross, they have a tendency to have a pretty decent little corrective move with them. I mean, look what happened last time. Went down about 3 points, 3.5 points. So that's why I'm saying if this continues to push, then this wave 2 is not complete yet. All right, that's the picture on gold miners. Let's take a look at the Baltic Dry Index. Okay, so this is data through yesterday, Friday. This is the latest reading on the Baltic Dry Index right here at 1195. Look at this little M top that's forming. And I was waiting for this to come and close back below this middle, and now it's done it. And where is it? It's at this trend line. Let me give you the bigger picture of what's going on. Okay, this is the bigger picture. Okay, it's not even the biggest, but we'll get to that in a second. This is right at trend line resistance. Okay, did a little M top over here like that. You see this fairly often. Okay, it doesn't always have to be, but we're getting it again. Okay, so this tells me that there's a decent chance that the BDI is getting ready to head back south again. And, you know, it's very, very interesting that we're seeing this like this when we're hearing that iron ore prices have collapsed well over 30% in the last several weeks. Okay, a huge collapse. And when you're getting that you know, iron ore feeds into steel making, primarily in China. There's been a lot of that going on. There's been this big construction boom, and there's a decent chance that this is signaling something else is happening. And of course, what is the Baltic Dry Index? It is an indication of the price of what it's the movement of things like iron ore, all the components, the commodity components that go into making steel and coal, shipping coal, all of these other things around the globe. And this is the bigger picture. Let me expand this out for you and punch this into 2005, and then you'll be able to see what I'm talking about with this resistance points. This was back in 2008. Okay, this is a peak when all of the commodities were just surging and everything. And you can see what's been going on. We broke to all-time lows here in 2015. We've been bouncing around and trending to the downside. And now we're all of a sudden, we've come up in this rally since that February 2016 when all the markets bottomed, okay? And we've rallied up in here. Now we're hitting this downward trend line again. So, you know, this is on my radar screen because we're seeing this with, you know, like I just said, with the iron ore prices collapsing and other things that we're hearing about the economy in China. So this is just one more flag that's popping up to say, okay, watch out, be aware. If you felt like the video was helpful, hit the like button and remember to share the video with friends and family. It's easy to do. Just click on a link and put it in an email or share it on your website. And if you want to get more insight, trade ideas, and education, become an insider member. Click on the link on the page here on the video screen, and it'll take you over to the membership page. You can check it out. All right, everyone, have a great rest of the weekend. We'll talk to you on the next video.